Welcome back. You're watching the India Development Debate, and if you've just tuned in, well, you're in the middle of an in-depth analysis of whether we've turned the corner on the Indian economy. And there are a number of factors that we've been talking about. We talked about auto sales with Mr. Pavan Goenka. We talked about economic indicators with our expert panel. And now I'm turning to real estate. So why am I talking about real estate? That's because of a report that was released today by Knight Frank, which says that home sales in this quarter have risen 2.5 times compared to last quarter. They're also saying that quarter on quarter, launches have surged about 4.5 times. That's new launches. Now, for an industry that was really badly beat, that is a heartening sign. Of course, people are not rushing out to buy homes or rent out offices. There is no indication of that yet. But sales in top 8 markets are at 54% of pre-COVID levels in Q3 as per this report. Ghulam Zia from Knight Frank is joining me on the show, as is Mr. Niranjan Hiranandani, to talk real estate. Mr. Zia, let me come to you first. Tell me how strong the signs really are. Are we seeing a flicker of interest in certain segments fueled by lower interest rates and maybe lowering prices? What really is the big picture as far as real estate is concerned?
Just to answer straight away your question, well, it is well spread. It is not concerning or connected to a certain segment of market. In fact, we've been watching the bifurcation of the sales that we've been reporting, even in like affordable housing, or whether you're talking about mid-end to the high-end luxury houses, etc. The action is happening all over. It is not that a certain sector is lagging behind. It's a very, very equal spread all across. And that is why when we are looking at these numbers, these are heartening to see that in a few markets at least, the numbers are outstanding. Like if I talk about, and since all three of us are sitting in Mumbai, I would love to talk about Mumbai. In Mumbai especially, the kind of numbers that we are projecting, and these are once again straight out of the registration data. It is not somebody's personal data that we are referring to, and that number is so clearly visible. Like the monthly sale that we saw in September, in last almost about 15-16 months, that kind of a monthly sale was not observed. So what are we talking about? There is definitely a clear sign, a distinct sign of something positive happening for the industry. And it is not just sales. Even on the other side, the developers have also taken their cues well. And the actual action on the site in terms of construction, etc., has also begun. New project launches. That's something which during another debate, somebody was asking me, what are the reasons that the developers have started new launches in spite of so much of capital issues, so much of funding issues, etc. So here it is. In spite of whatever is happening, and I'm sure just before our session began, I was also watching your earlier debate with other economists, etc. There are positive signs everywhere. While we have a confirmed sign of an auto industry giving you positive numbers, and now the second one is real estate giving you these numbers. But overall, the job numbers, the improvement in the job numbers, and overall everything is looking positive. May not continue. Like there are once again those dialogues, V curve, U curve, W, whatever alphabets in English are available. But then once again, if I look at this, what is happening today is positive for the sector.
Okay, Mr. Hiranandani, briefly, what is going on with the kind of interest that you're seeing? I'm assuming that luxury and larger apartments are not in vogue right now. People are going for smaller apartments, maybe in tier 2, tier 3 cities or on the outskirts of Mumbai, Delhi. Is that the kind of trend?
Tamanna, I'm sorry to negate your statement, because what Zia mentioned and is correct is the fact that the growth has taken place in all the segments. It's there definitely in the affordable segment. It is definitely in the peripheral of areas, but it's also in the luxury segment. So we are seeing islands of growth, green shoots, so to say, in all the segments of economy. Number two, what we are also seeing more, Tamanna, is the fact that those flats which are ready or close to ready have certainly shown a greater interest, no, much greater interest in the recent times of people wanting to buy a flat and move into it very quickly, especially those who want to upgrade the sizes of flats, those who are working from home. All these elements are definitely making a world of a difference. So I would say that about 50% of the kind of business that we had is come back. 50% is yet to go. So what we would have to say is the good story in terms of improvement in the total amount of sales that we see across the board, but we don't see that it is brought back to the situation that it was, let's say, last year at the same time. So we do see improvement, but still some way to go. And the story of Maharashtra government reducing stamp duty has definitely sunk in. So what Mr. Ghulam Zia just mentioned, that in the Mumbai region, there is an increasing interest. It's all over Maharashtra. The 3% reduction in stamp duty has certainly helped a lot of sales to actually get closed. People used to look at apartments and really consider, should we buy it now? Why not wait? Have we got enough money to really do the EMIs? The stamp duty has definitely precipitated those people who are...
That's the thing. Mr. Zia, let me ask you this question. I'm wondering, who are these people who right now want to commit to an EMI or want to commit to, spending a huge part of their savings in something like real estate with no visibility on capital appreciation per se, and in a lot of cases, no real, confidence of jobs and incomes?
Okay, the second part of your question or the reference that you're drawing is something which I would want to negate right away, which is, the people are looking at it as an investment. Well, if you're talking about appreciation, well, people have realized long term back that real estate is not a short term punt. It is not something in which you put in money and expect it to double up in next 2 years or half a year or so. That's something which people have resigned to. There was this kind of an air maybe about 5-6 years back when real estate was looked upon as a big satta or punt or whatever else you want to call it. Not so anymore. So the investors realize that it's a serious business. It's not something where you will make money overnight. So the buyers who are buying the apartments today definitely are the ones who are the end users. And let's also look at why these end users, and I'm sure Mr. Hirandani would love to elaborate upon it. There are these indications that the people are looking at apartments for sure, because in these times, when the pandemic times, when people had an issue to continue as a tenant in their properties where they were staying, there has been a very clear mark on their psyche to look out for an apartment where they could call their own apartment. And maybe a few of those instances when because of the new requirement, the newfound requirement of an office working from home and so on. So a few of them who have money may also look for expanding of their apartment sizes, etc. So a couple of those activities have begun. Well, let's also not forget that a large number of this could have been the people who have been waiting in the wings to buy, and they had their funds arranged and so on. So if your question was who are these brave hearts who are willing to punt on or who are willing to buy an apartment with expectations of huge EMIs, etc. coming in, let me tell you that at least to start with, we are right now scratching the surface. These are people who must have had their finances very well sorted out, and they're the ones who are coming in. But that, let's not forget, real estate is also largely driven by sentiments. And on the back of it, when the economic data, etc., is falling in place, that comfort is coming in, that sentiment is building up. So when we are looking at the surface, the top surface, people are coming and buying, the next in the line are also very keen to now come in and sign the dotted lines. So to answer your question, it's a very well spread situation. It is not very simple to answer that these are the guys or those are the guys. It's all over.
All right. Okay, so there are real, genuine buyers there. There are real launches happening. This data is showing that there's an uptick. People who watch this show regularly will know that I'm not one to, take every positive headline at face value. So we've tried to do a thorough job of actually analyzing where the trend is going. It seems to be going upwards for now, and we're thankful for that. Thank you so much, Ghulam Zia and Niranjan Hiranandani, for joining us on this leg of the debate. I want to quickly draw our viewers' attention to the big current affairs news story today, which came in from Mumbai, with the Mumbai police claiming to have busted a fake TRP rigging racket. Now, my colleagues at Times Network spoke with the Mumbai Police Commissioner about this. Listen in.
Less than a week ago, we received a complaint from Hansa, which is the agency which works with BARC, which does the measurements of TRP for different channels. And TRP basically is meant to measure the viewership of different channels.